Well, we seem to be on at the start of a very interesting week of trade in front of us. But let's take a look at how global cues are aligning up at the start of this week, as well as how global markets fared last week. Well, US markets gained in trade on Friday. Of course, it's been a whipsaw kind of a week last week, and investors are trying to gauge the ripple effects of the sanctions that have come through on Russia. Well, lots of phases of sanctions that have come through, and investors are trying to assess those as they unwind. Well, the Dow gained 2.5% on Friday, obviously on the back of more sanctions and hope that maybe Russia may retreat. The S&P 500 as well as the Nasdaq was positive as well. The S&P 500 more tempered, 2.25%, and the Nasdaq was up around 1.6% in trade on Friday. Both the S&P and the Nasdaq were positive even for the week, so definitely positive cues there. The Dow though was still in the negative for the week through last week. Moving quickly on to what are the cues coming out from this week. Well, the Fed chair is going to testify before Congress twice this week, largely on the lines of how interest rates etc. will go up going forward, and that will continue to be in focus. Of course, one more ripple effect to that will be how bond yields are going to be going over the course of this week, and that will be an interesting one to watch out for as well. Well, starting off with how US futures are looking in early trade today. Well, they are largely lower. In fact, the Dow futures are down around 1.7%. The S&P 500 down over 2.5% in terms of their futures, and the Nasdaq futures are down 2.68%. So clearly negative cues coming out from the US futures standpoint. When we look at quickly as to how Europe closed last week, well, all indices were 3% plus in the green in trade last week. Asian indices early this week look mixed, at least at the start, with the Kospi and the ASX 200 clinging on to some amount of gains, while the Nikkei, Shanghai as well as the Hang Seng are all quietly in the red. Not too much carnage happening at the moment, but quietly in the red is how I would term it. Moving quickly on to how commodities are looking. Well, interesting couple of pieces of movement in commodities. Oil has gone up 5%, breaching that $96 a barrel mark. Now, this is largely on the back of sanctions on Russia, and that is led by the SWIFT sanctions which have been made on Russia, which will mean that Russia's payments coming in or received due to oil exports will be hampered, which will mean that oil exports will also be hampered, which will mean that oil supply to the global marketplace will be hampered as well, and that has led oil higher. Gold as well, slightly higher. It was below the $1,900 an ounce mark, is now inched higher above towards that $1,915 an ounce mark. Moving quickly on to commodities, everyone running to the dollar, which is the safe haven per se. The dollar index has seen strong gains over the last week or so. It's at 97 broadly as we speak. The US 10-year treasury yields are at 1.9%. Mind you, we did speak about the impact of the Federal Reserve Chair, Mr. Jerome Powell, testifying before Congress, and that may have an impact on bond yields as well. Bitcoin is trading lower, almost 4% lower. It's just below the $38,000 mark. So crypto is in the negative as well, really not behaving like the hedge or the safe haven as some experts term crypto to be. So broadly, this is how global markets are looking in early trade today.